if you come at the king, you best not miss. Okay? That is very important here because you came at GME, maybe, or this hedge fund shorting GME, GameStop. And, you got all this passion. Everyone got real riled up. Oh, we're sticking it to Wall Street, sticking it to Wall Street. But you didn't even read the terms and conditions of Robinhood. You thought one step. If this was a chess match, you'd be like, check. And then they're like, checkmate.
Welcome back. You are now doing less with your favorite hosts, Brendan Dale, John Archibald, and Jeff Barsamian here, where we talk about whatever the hell we feel like and see where the conversation goes. Which one of you wants to give a recap on the most recent news of the week?
I'll do a little short 2 minutes, and then Jeff, you'll fill in the
give us a concise summary before we give your takes.
So real quick, you probably heard of it by now. It's all over the news. It's the biggest story of the past 3 weeks.
We cut Henry and we cut Jack from the podcast because they sucked.
They weren't working out.
One and done.
So we're back to the A team. And so, but yeah, this group called on Reddit called Wall Street Bets, which is basically this group of individuals who are very funny and they make jokes about stocks and finance and the economy, and they basically treat the stock market like it's a game at like a casino. So their gains and losses are usually this on the small end 2 times winnings, and on the large end like 1,000 times winnings on like penny stocks and stuff. They're just doing crazy stuff, irresponsible with their money. But they had the idea to once they found out that there was a hedge fund called Melvin
Capital.
Melvin Capital had short exposure to the stock GameStop. I always say GameStop.
GameStonk.
They found that out, and they realized that there could be some leverage opportunities where they could employ and make a whole bunch of buying occur of GameStop. And in doing so, that would create a lot of upward pressure on the price and would really screw over Melvin Capital. And so they wanted to do like this fun little prank that would really take it to this hedge fund, like this Wall Street hedge fund, and like actually making a real impact other than these just kind of stupid 10-baggers that they posted here and there. So once they started doing that, it became kind of really obvious what was happening because the stock was up. It was like a $1 stock a year ago, and then it went up to like $30, which is already catching people's attention. And then really recently, the stock went up to like $100. So it's like now it's like mainstream coverage, and it became like this narrative where the like Reddit was taking on the wall, the 1%, and they were actually going to make the hedge funds pay for screwing over the country. So everyone kind of started backing it and became this like this hyper speculative play where if you are against the 1%, you could show your solidarity by buying stock in GameStop and watching it go up to the tiers of the 1% on Wall Street.
So why don't we take a quick pause there and say, so that was kind of the narrative leading up to as of really yesterday. And that's all over the news. GameStop stock in less than a week went from call it $30-$40 up to peaked yesterday at like $350. Right, so the story is like everyone views this as this David versus Goliath. The little man now with resources like Robinhood and whatnot can all use social media or things like Reddit to pull together and kind of take down Wall Street finally, and at least in this case. But then in the past kind of 24 hours here, the narrative's really shifting, and we're kind of seeing really who holds the reins here. So who wants to explain what's happened since then?
Yeah, I mean, they just pulled
Yeah.
a casual $20 billion prank. Everyone had a good laugh afterwards. They're like, sick prank. We all had good fun. No, yeah, that has been the narrative. I don't. That's not what happened, as far as I'm concerned. That's what everyone's rolling with. It's like, you got the little guy versus the hedge fund, and they're taking the hedge fund's money because they screwed up our economy in '08. But I think people misunderstand what Wall Street is.
So Jeff, sorry, and
Yeah.
just one last. I mean, it's good that you're gonna give your take, but the last thing of purely just background would be today. What I think, Dale, what you're talking about is what happened was the trading app Robinhood actually limited people from buying shares of these stocks in a move that's a lot of speculator. There's a lot of speculators that say because Robinhood is affiliated with Citadel so heavily, Citadel owns or has interest in Melvin Capital, that Citadel kind of dropped the hammer onto Robinhood and kind of put the kibosh on the speculation. So that was the big news today. But so Jeff, why don't you go ahead and keep going with that's the kind of overall narrative. What really happened?
Yeah, I think the narrative on the way up and the narrative on the way down are both wrong.
Yeah.
So let's start with the narrative on the way up. So you got Wall Street Bets who's sticking it to the big man by ganging up on him and figuring out this short opportunity. I don't think we need to get into the mechanics of that really, but I think people need to understand what Wall Street is, because basically everyone on the internet I see commenting about this, I don't think really understands what Wall Street does. And when you learn really how Wall Street works, it takes a lot of the mysticism and a lot of misconceptions people have about it, because it's actually really simple. The most important thing you need to know about Wall Street is they don't invest their own money. That's not how they make money. They don't take their money, make really smart bets, and then win big and then cash out and make all this money. No. That's not what they do. They invest other people's money, and if they make money, they take a piece of that, and if they lose money, they say, sorry, you shouldn't have given us your money. That's all they do. They don't care which way the stock goes, because no one knows which way the market's going. All they do is they say they're a neutral third party, and whichever way the stock goes, they're taking their management fees, their profit, capital gains fees, what have you. And no matter what happens in the market, they walk away getting paid. Okay? So when everyone's talking about Reddit, ganging up on this hedge fund and blowing up their short, costing them $20 billion, they're not costing this hedge fund $20 billion. They're costing the hedge fund's investors $20 billion, who could be anybody. I don't know if they've released it. I haven't necessarily looked. We do know Citadel and like Point72 and a couple other ones recently invested with them, but they manage like $20 billion. Mm-hmm. So they could have any number of investors. Some hedge funds, their investors are teachers' pension funds. Some are 401ks. So lots of normal, everyday people do invest with hedge funds. I can't say that's the case with this one. This could be a particularly speculative, risky, kind of rich man's group. I don't know. But the point is, most of Wall Street's money comes from 401ks, pensions funds, school endowments, stuff like that. Average, ordinary people's money, and they just skim off the top. They get paid no matter what. So when Wall Street Bets gangs up on this hedge fund, and they cost some group of people, maybe they're the rich, evil 1%, I don't know, but they cost those people $20 billion. Yeah, this hedge fund's probably never going to get any business ever again, but they didn't lose any of their own money. They've been getting paid to manage this money their whole life. They've been putting that money away safely, and they're going to walk away with their money intact. And yeah, they may never work again in Wall Street, but they didn't really lose all that much.
Yeah, so I think that's kind of part one, right? Part one is even if Reddit and the common man, wins the game and screws over these Wall Street guys who have short positions on a stock like GameStop, then as you said, it's not actually the people on Wall Street that are losing money. It's somebody else who's investing with them. And secondarily, once we saw this kind of speculation taken off in the last few days, you saw the companies like Robinhood, who, interestingly enough, whole kind of business plan is being for the common man and giving them access to Wall Street and to the market. Now stopping the ability to purchase stocks like GameStop, AMC was another one. I think there was a few others. But all these ones that are connected to Wall Street bets, they stopped allowing people to buy them, but allowed people to still sell them, essentially forcing the price to go down in a sense. And then also Wall Street Bets itself, the Reddit, the feed where everyone's talking about this and came up with this theory in the first place, got banned at least temporarily or shut down, all in the same day. So not only are they incorrect for thinking that they're kind of taking down the 1%, but at the same time, somebody looks like they have the ability to put their foot down when the common man in this situation has the ability to bet their own livelihoods and make money. Looks like someone somehow, obviously, if you're somebody that's a part of the Wall Street Bets gambling on this, it looks like, the man is putting their foot down and not only shutting down your ability to communicate, but also stopping your ability to trade. So it's kind of two blows in one there.
To comment on, so to make like an illustrative example of what Jeff was saying, if you've ever seen the movie Wolf of Wall Street, right? What is that movie about? It's not about someone who's like, listen, I know what stock is going to go up and I know what stock is going to go down. Give me all your money and I'm going to put it in this trade. That's more of like The Big Short, but that's not what we're talking about here. We're talking about he's on the phone with, people that don't know what they're talking about, and he's selling them crap, or, I mean, in the evil case, of Wall Street, the evil case is, they know better, but they're able to just make money on the fees, so they're going to just try to sell anything that they can to these retail investors. So that's kind of what Jeff is saying. It's not that these guys are like these quant, analytical, tell the future kind of guys. It's like they're salesmen, really, that are able to make it look like they're about to tell the future, but really they're just, a lot of the time they're just mirroring what the market is like, the broad market, how the broad market caps are weighted. So if they mirror that, then they can at least say, oh, we mirrored the market, and they don't have to take a lot of risk. So they're just taking fees on basically what is no work. But yeah, and then to Dale, what you were saying about how if you're expecting to go to Robinhood and then Robinhood doesn't let you enact the policy or enact the trades that you want to do, it's like, oh, they're out to get us. Like, oh, this is a considered effort of the, a centralized power or a centralized institution to not let us do what we should be allowed to do. And it's just like, that is founded in absolutely no like real logic. Like today I tweeted, if you're going to Robinhood with the intent to take one over on Wall Street, essentially that is invading Russia in the winter and asking to borrow guns with which to kill them. It's like you're going into their territory and using products that they've created, and you're going to try to pull one over on them. It's just like they control the rules at that point. They're going to do whatever that is to maintain their stake in the market and their control of the market.
Right, and not only that is, people who use Robinhood are not the customers of Robinhood. They don't pay for Robinhood. The customers of Robinhood are the hedge funds who buy all this data and front run all your trades, and you're the product if you use Robinhood. So the idea that they'd have your back in when you come after the king like this, like, no. like they're gonna side with their customer. Now, granted, I don't think this is a good decision in the long term for them as a business, because who the hell is going to use Robinhood now, knowing they'll just block you out of trades when the time matters most? And in some cases, I don't know if this is true or just a rumor, so I don't want to act like I know for a fact it's true, but I saw some like reports from Robinhood where it was saying, due to volatility, we closed your trade out for you. So maybe even trading for you. I don't know if that's true or not. But either way, the press for Robinhood is terrible. And I wouldn't be surprised if no one ever comes back to Robinhood. And if that's the case, yeah, they might have saved their customer, but they're not going to have any customers after this because they don't have a product. They don't have any users' data to sell. So one thing I want to make clear, because I see like a lot of libertarians, I think, getting this kind of wrong. They're saying, like, this is the state's fault. And now, I will say, Wall Street is propped up by the state, 100%. The Federal Reserve is basically a branch of the government propping up Wall Street with cheap money and low interest rates. So I'm not going to touch that. We talk about that all the time. But if that were not the case, okay, ignoring those conditions, the conditions in which Robinhood essentially terminated your ability to trade, if you open up their terms and conditions, it says right in like the terms and conditions, we have the ability to terminate service for whatever reason we want, whenever,
at any time, with no notice. Yeah.
With no notice. It's well in their terms. So like, I know this is not going to win me any brownie points with anyone, and I know no one reads the terms and conditions, but we have to be more responsible consumers and investors, because you're signing a contract when you agree to the terms and conditions. And if it says, I can halt your service at any time for whatever reason, you're being a fool for trusting this app. You should never trust it in the first place. Like, they're going to screw you if they can just cancel your ability to trade whenever. So this isn't an example of like government overreach or corporatism or state. No. This is capitalism. It's maybe ugly, but it's capitalism, because it's people voluntarily using a product, and that company is not going out of reach of their terms and conditions. And it may be terrible for their business in the long run, but companies are free to make terrible decisions. This is not an example of government overreach in that particular example.
Yeah, I think that there's actually a lot of parallels to what happened today and what happened 3 weeks ago with the Capitol insurrection. I think that both today and then, you've got a bunch of people that want to take one over on, people that they think have wronged them, or that kind of have more. There's a large power differential that exists that they want to kind of redistribute in some ways. So they get this really strong, impassioned, emblazoned with this directive, right? 3 weeks ago it was, we're going to show up and protest, right? And then today it was, right, the past couple of days it's been, we're going to buy the stock and it's going to show them, that's the protest. And then it turns into something where it's like, you gain this like critical mass of people that are like, we're so committed, like, we're going to go all in, like, people that actually busted through and went into the Capitol. It's like, for seemingly no reason other than the fact that they were really dedicated. And these people that are just continuing to buy the stock at any price, it's like, they have no idea of how much this is actually materially affecting people on Wall Street. They just have this directive in their mind of the narrative is, I want to buy the stock and I want to, enact some rebalance of power, and this is going to help us show them that, they're not the boss of us, stuff like that. It's just like, you can't just be extra passionate and expect that to be enough to change the world. Like, you got to understand stuff first, and you got to take a second and say, what are we doing and how can we do this the most effective way? Like, I would say to the people today and the people 3 weeks ago at the Capitol, I would say to you, you are not wrong. You have a cause worth fighting for. Like, this is good. You're understanding that things aren't fair, and that's the first step to making change. But to just act on the first kind of passionate story that comes across your desk is not enough. We need more from you. We need you to think critically, and we need you to understand that there are actual things, like Jeff was saying. The Federal Reserve, in this case, is the reason. Don't get mad at Wall Street. Wall Street is just doing what you would do in their position. They're just benefiting from all of the easy free money that they get. If you got easy free money too, you would do well too, and you probably wouldn't feel bad. You'd probably feel really smart. You think that you're like some genius. You can't. Don't just get mad at the fat cat who is benefiting from the game being weighted towards his side. Get mad at the referee who is making it such that the fat cats can exist and that people like you get shafted every time after time after time. So you need to keep that passion and keep that change spirit, the spirit for change up. But you got to reposition it towards the Fed, towards the thing that'll actually matter for change.
Right. I think a couple of cliche sort of quotes, but I think are very appropriate here is like, don't hate the player, hate the game, right? So people who rationalize, oh, if I was on Wall Street and I was getting all this free money and like I had all this influence, I would be a good person and I would, get like you don't know because you're not in their position, right? So like you can generally assume if you had tons of access to wealth and influence, you'd probably abuse it because people do that.
And you kind of do know because you are in the top 1% of wealth in terms of the whole world.
That's true.
So the fact that you don't donate all of your wealth to, children in Uganda is like, they have the same claim to your wealth as you do to the 1% of the U.S.
Right.
Just rational action, right?
Right. Yeah. Like, so they're just behaving rationally. I'm not saying it's fair. I'm saying you can't expect them to turn down these huge incentives to act the way they're acting. You have to fix the game. We have to stop playing this stupid game we're playing. Okay? So that's one. And then another quote from The Wire that I think is very fitting is, if you come at the king, you best not miss. Okay? That is very important here because storming the Capitol with no direction or whatever, you're all going to get arrested. They'll throw you in jail. No one will feel sorry for you because you look like a fool. You didn't plan anything. It was foolish. Okay? Same thing here. You came at GME, maybe, or this hedge fund shorting GME, GameStop. And, you got all this passion. Everyone got real riled up. Oh, we're sticking it to Wall Street, sticking it to Wall Street. But you didn't even read the terms and conditions of Robinhood. You thought one step. If this was a chess match, you'd be like, check. And then they're like, checkmate. You didn't even think 2 steps ahead. We need to be better than this, okay? If we're going to actually change things, you can't play hero on your phone and expect like the world to be fixed. It's absurd.
I think that was really well said by both you guys. That was awesome. Like, the less passionate way that I was going to say it was just like an angry mob that has reason to be angry and is fully justified in their discontent. Just jumping on the first person who's giving a rally cry behind here's how we're going to get them. People are like ready to act, just jumping on it. And like you said, not organizing, not thinking about how to make real change. And like you said, now people are realizing who these discontents are, what people are angry about, and you're going to prevent it from, are going to now take precautions to prevent that kind of action from being successful. So got to find a better way. You got to find a way to change the system, whether that's with your vote or however you're going to do it. There's got to be something better than, anything you can do in a day.
Right. We need some adults in the room, people who are thinking long-term, logically, regionally, not emotionally invested in what they're saying. Some actual real plans to fix the problems in this country. And when I look around, I don't see any adults in the room. It's like everyone's behaving like a child. And it's like, I don't know how we can expect anything to improve from this sort of behavior. I don't know.
Yeah, just the fervor on Twitter. Like it wasn't even until probably 10 a.m. or really maybe a little earlier than that. But, these past couple of days watching all this stuff unfold, I research this stuff all the time, and I see stories that I it takes me time to understand. With this story, I still didn't even understand it as of like this morning. I kept going back and forth of like, okay, maybe they're smart because they are making a play on, a chance to, get wealth. If they really do squeeze them out of their short, then, there's going to be less whatever float available to lower the price so that the majority of them that went in can get out and a profit. So I'm going back and forth of like, but no, they're really dumb because the SEC is just going to get all their ass and audit them all. Like I'm just like, I just needed a lot more information than what I saw at like this morning. It's like, it basically was this giant consensus of like, this is what's happening. It's us versus them. We're buying this stock, period. Don't think about it. It's us, are you with us or are you against us? And it's like, especially after it went down, like after about like 11:15, when it went down like 60% in maybe 30 minutes, I started to see tweets like, don't defend the suits. Like they're like, don't be one of those people that
right. Like you're selling out if you sell your position.
And it's just like, no, like there's nuance here that you're not catching. Like did you really think that making a 3-bagger or 4-bagger on a stock purchase of GameStop, a meaningless piece of paper or a worthless piece of paper that's a company that's about to go bankrupt, you think that's really pulling one over on anyone? Like you gotta try to understand it, and the people that are understanding it, you gotta listen to them.
Yeah, and if you're looking for who to blame here, and you think it's all just these evil 1% people, look, don't get me wrong, there's a ton of corruption, and I hate it. There's so much corruption at the top, so many people benefiting from easy money, fraud, and fiscal policy. It's a disaster. But if we're looking for people to blame, we got to look in the mirror, because the reality is Wall Street manages $6.4 trillion in 401ks. And we all signed up for these, okay? We all want a piece of what's happening on the Wall Street casino, where we go, if I get my 8% every year, then I can retire at this age. And everyone wants a piece of that action. But the reality is, the people walking away with the money are the people managing it with all the fees. And the more you participate in this casino, trying to get rich for free, or just get this insane growth that you're tapping into in the stock market, they're walking away with everyone's money. And it's our own greed of trying to just get these insane returns that keeps piling money into Wall Street, that they can just say, 2% here, there, whatever. And then if it all crashes because they're trying to meet these insane growth obligations, well, then they can go to the Federal Reserve and say, or the president and say, well, I mean, if we go bankrupt, it's all the teachers' pensions that go bankrupt. And it's all these 401ks. It's ordinary people that are going to go bankrupt. And the politicians hear that and they go, well, I'm not going to get reelected if I let everyone's 401k go bust. So they bail them all out. Okay, we all have a hand in this. We can't just act like it's like a freaking Marvel movie where it's just supervillains versus the good guys. It's right. Childish.
And a real quick point, it's like, what are you guys doing? Oh, we're gonna manipulate this stock price to go way up and screw over these Wall Street greedy guys. It's like, oh, what do the Wall Street greedy guys do? It's like, oh, they manipulate prices every day. So it's like, oh, so you're going to manipulate prices in order to get back at people who manipulate prices? It's like, are we in kindergarten? Like, since when did two wrongs make a right?
That and like, what's your long-term strategy there too, right? Like, okay, so right. One group, Melvin Capital, like what percent of Wall Street are they? Negligible.
It's nothing. It's like 20 billion of the 6.4 trillion we're talking
right. Like,
about.
okay, so you put one guy out of business and he doesn't lose much of his own money, as you alluded to. And then
there's a good chance that they actually exited their short position. There's rumors that they're done, or they have no more short exposure. Which at that point they're fine.
What happens to all the Redditors who are holding GameStop at $300 a share? Like, what are you going to do in a week? What are you going to do in a month with that?
Right.
Like, all right, glad you didn't think about it and you ganged up on Wall Street, but now what are you going to do? You can sell that?
Right. Yeah. At this point,
if you sell it, you're teaming up with the suits.
Right. So. At this point, they're just playing a zero-sum game with themselves. It's Another thing people need to understand is about stocks and Wall Street and all this. If real earnings, so like earnings of stocks that are not just created through inflation, so not from more money printing, or financed with debt that's not going to be paid back, which happens very often. Talking real natural earnings growth, that is the only intrinsic value there is on Wall Street. Unless that like number is going up where it's more earnings that can be returned to investors, the growth you see is artificial. It's speculation. It's zero sum, and half the people win and half the people lose. It's a casino. It's a literal casino.
Right. Where
Wall Street is the bookmaker taking the vig. And people need to wake up to this. They're getting the wrong narrative of what's happening. And I don't know. I like the energy. I do. And the memes are hilarious. But we need to be a little bit more careful in our analysis, I think.
Yeah.
Totally agree. As always, people have a hard time diving in above the headline, right? And
right.
So that's a continued problem that I think will kind of be an underlining theme to every podcast we talk about.
Especially when you just pile in on all the memes. I can't hate people for doing that because that's been
right.
Great.
That's true value.
Right.
Yeah.
One of my favorites is that
in the meme economy.
Yeah. One of my favorites is that the GameStop stock's going to be trading at the like GameStop resale value of your video games.
Oh, that's a good one.
Best I can do is $3. Anything else you guys got to get off your chest on this matter?
Yeah, so another thing I do want to bring up is I think this point may be lost on some people in all the mania that's been going on. But I think it's significant. Is when Wall Street Bets was coordinating, making their plan. Discord banned the Wall Street Bets channel from their Discord. Okay? But why did they ban them? What was the reason they gave? They said hate speech. Okay? And I think that is really significant because we all know that's not why they banned them. It's because they were coordinating this pump and dump on Melvin. But they called it hate speech. And my point is, when something's so obviously not about hate speech, granted they do say a lot of crazy crap in Wall Street Bets, but I'm sure a lot of Discord's servers do say plenty of stuff, and they've been saying crap forever. So it's not like this was the week where they're like, that's it. Wall Street Bets, you've gone too far. We're cutting you off.
Yeah.
It's obviously related to this. And when you have this case with an obvious ulterior motive and they're banning them in the name of hate speech, you can't help but call into question every other ban in the name of hate speech for expedient reasons. And I think that's really important, and I don't want that to be lost on people.
Yeah, a little bit of like a boy who cries wolf potential issue there, right? So there's real situations where hate speech is a problem and you got to ban it, right? But if you use that as justification for banning something when it's clearly not the reason, now you're crying wolf and you're really taking away the legitimacy of such a claim. And not to mention on public forums like Reddit, anyone, not to use conspiracy theorist terms, but anyone could infiltrate that and post hate speech in order to get it shut down if it's going against their own personal interest. So it's kind of difficult to manage around.
Yeah,
right, and it's.
I had another point. If you had something more to say on that.
I was just gonna say it's an easy accusation to throw out. Like, it's just like, oh, it's hate speech. Cancel them. So you can just put that under the umbrella of whatever, since it's super vague, and then just ban people for whatever reason you want.
Yeah. So my point was going to be, in true do less form, we got to mention the fact that the congressmen were really starting to get behind the Reddit group, the Wall Street Bets, by saying, oh, if people want to make this trade, then they should be able to, like Robinhood, you have to be accountable for whatever the people want. And it's like, and Ted Cruz agreed with her. And so a lot of people were saying, like, making a joke, like, oh, this is bringing together Democrats and Republicans. Like, is this going to be the issue that unites the politicians? And it's like, no matter how funny you think that is, a good mental model to keep in the back of your mind is like, anything that AOC and Ted Cruz agree about, I probably am against. It's like, so like, just keep that in the back of your mind, and if it may not seem obvious at first, just listen to a little, like, do less calling at you from the back of your mind, saying they both are representatives of the state, and they're agreeing on something. I better be very careful about what they're agreeing on. and that is really the actual, another very scary thing that could come out of this whole event, and not necessarily about the Robinhood thing, because I think that's going to be I think that, like, there's a lawsuit against them. I think that's dead on arrival. Like you said, Jeff, if all you got to do is point to the terms and conditions and say, no, we can do this.
We warned you.
You didn't like it, but we can do it. So it's like, yeah. If the people in Congress get upset about it, though, they're gonna do something. That's just kind of the nature of what government. That, like we say on this podcast, they don't ask, is there something that can be done about this? They ask, what should we do? Because we got to do something. So it's like, and they're gonna be trying to pass something about regulation of Wall Street, regulation of retail trading. They're gonna put their big, like, sloppy legislation all over it, and you know who's going to benefit the most? Wall Street. The people that are already in bed with the politicians, the people that already have the lobbyist dollars flowing directly into the bank accounts of these politicians. So it's like you got to be more cautious about something like that. Like, you can't just let that fly under your radar.
Yeah, I agree. And I also think I would just point out that it's not always so directly malicious. I think in a lot of cases, these politicians, like, actually want the best for the people in many cases. I mean, not all, but when someone like AOC, like, just sees that her constituency and a bunch of, like, regular people are really upset and really are getting screwed over by this company in the way that they're, like, organizing and regulating, like, the ability for these people to trade, they want to speak out and say, like, okay, wait, this isn't right. We should do something about this. But then in practice, by adding some type of legislation, which is really the only power that they have the ability to do as a politician, all they can do is add legislation, in some cases repeal, but more often than not, it's adding legislation. And to your point, the people on Wall Street are the people that are being advocated for at that level because of political donations and funding. And they also have the accountants and lawyers who have the ability to manipulate any complicated legislation that gets added. Mm-hmm. So at the end of the day, to your point, they benefit.
I would take it even a step further than that. What people got to realize is people in Congress don't even write the legislation. They push it through, but some lawyer or lobbyist writes the whole thing, and then they kind of put in or edit it as needed. But for the most part, they don't even really write the legislation. So literally, if you're pushing for some legislation, they're going to say, well, we don't really understand Wall Street, so let's just let some, like, Wall Street lawyer write it, and then we'll just give it a once-over, make sure it sounds good, put a good title on it, like, no more Robin Hood or whatever the hell they're going to call it.
So, to your point, like, there are no more
robbing the hood.
That's amazing. To your point, like, they're no more knowledgeable than, like, the 5,002nd Redditor who jumped in on GameStop stock, because that's how we're taking down the 1%. Right. And when somebody sees that bill come across their desk on something they're not knowledgeable about, they're like, you said this is the one that's, like, anti-Wall Street? Got it. Sign. Right? Because, those things are probably 600 pages, and they don't have a chance of understanding that.
Yeah. And also, like, where they get their money from is all corporate. So, like, they're not going to do anything that pisses off their donors, because they always got to run for re-election and they need money. So it's just like expecting government to control itself and sort of the top echelons of business is just so unrealistic because those work together hand in hand. So you can't solve this problem by, tweeting at AOC. Like, it's just, that's not how this gets fixed. I mean, maybe we should talk about how it does actually get solved then. You guys have any thoughts on that?
When we're talking about a problem, it's always good to say, all right, this is not going to fix it. I'd like to end on a, okay, what can you do?
Yeah. Right.
Which I don't think there's an easy answer here, but have you guys come up with any thoughts?
Well, so let me kind of segue into that by posing a question I was asked. Someone texted me about, this, what was happening today, and said, like, what was going on? I was explaining it, and then they said, has anything like this ever happened before? And I said, yes, kinda. It's like, I don't think it's ever been specifically like, oh, this financial derivative is overexposed to gamma sway, or like a shift of gamma exposure to the dealers, whatever, that I don't know the full, obviously, what they were trying to do, but this attack essentially from the people to the 1% to try to like redistribute wealth. I don't know if it was ever specifically that, but this kind of stuff has happened all the time in the last 50 years with without having like hard money that's backed by gold or backed by a reasonable claim to gold. You have what's the sign of all of these speculative bubbles, whether it's 1999 or 2008, is assets that are completely disconnected from the fundamental value, right? So in 1999, you had like whatever stocks it was. If they just said they were like on the internet, if they had a .com, then it's like, oh, that's representative of the future. This stock is definitely going to be higher in the future than it's today, which made it go higher, which made people think it can't go lower, which made people buy more. So it just like was this self-fueled bubble. How does that end? The stock market crash. 2008, same thing. House prices, it can't ever go down because they keep going up so much, and it doesn't actually matter what the house is worth. It matters what someone's willing to pay. So I'm going to buy it, and flip it. All sorts of speculation occurs where it's like, don't you guys think about the asset value itself? And they say, no, I'm trying to make money. I'm trying to make it money, stupid. Like, stop trying to be annoying.
Money's stupid. You're getting rich.
Exactly. So it's a different kind of, call it like a different facade, but it's the same structural makeup. It is a speculative bubble, asset prices completely disconnected from the underlying value, right? So, and how does that happen? I kind of mentioned it. It's from credit that has no real basis, which is all stemming from the Fed. So if we understand that, and we understand how these asset prices are more of like a roller coaster than an investment strategy, and we refuse to participate in speculation, and we start to invest in sound stores of value and sound fundamental profit yielding, wealth generating assets, our economy can get rooted in some actual bedrock of wealth generation instead of speculative bubble fervor.
Yeah, I like to add on to that. Like, I think not enough people understand the difference between money, wealth, and credit, right? So this isn't the common definition of money, but I would argue money has an end use. It has to, okay? If it doesn't, it's not money, it's credit, okay? So
it's not a common definition recently, but throughout history, that's actually been way more commonly the definition.
Right. So throughout for most of history, gold or silver has been money. There's been other kinds where it's like wheat or tobacco, but you'll notice every single time it's a good with an end use. In prisons, you'll notice they'll use cigarettes as money. Every single time there's an end user, okay? And the reason that's significant is because your money can be used for something even if no one else wants it, okay? And so it has value if you hold it, and there's a likelihood you can trade it to someone even if you're not the end user for something of value. Okay? Now, credit has no end use, right? A credit would be like, let's say I have gold and I put it in a bank, and the bank issues a note and says, I owe you 1 bar of gold. I now have a credit for gold. If I now trade that around, that's not actually money. That's just a credit for money, right? And so if I'm holding that and I go back to the bank and I say, all right, give me my gold back, and they're like, sorry, we don't have the gold. We got rid of the gold. I now have nothing. So I had a credit I thought was money, but it was simply that, a credit. Credits can go bust. Okay? So it's important to understand the distinctions between money and credit. And then the other thing I mentioned is wealth. A lot of people will look at their stock market account and be like, I'm rich, because they'll put a number in there and it'll be like $1 million I have. But you don't have $1 million. What you actually have is Microsoft, Amazon, Facebook, Netflix. You have these shares of stock. And if no one's willing to pay you the amount it says in your little stock market account, if there's not a bidder there who's like, yeah, I'll pay you that, then you don't really have those dollars. You just have those stocks, okay? So you can't count your chickens before they hatch. You don't have that cash until you sell. And even then, if you have that cash is no longer a claim on anything real. So if you want real wealth, you then have to go spend that cash. So someone has to want that cash in return for like a house or something. That's real wealth.
Assets. Yep.
Right, assets, exactly. So what people got to realize is most of what we own in America is credit, okay? And that's not necessarily a problem. That's fine. Like good economies function with high levels of credit. But people really need to understand how much credit there is out there, because there's a lot. Mm-hmm. And when there's a lot of credit, bad credit tends to leak in, and you really got to second guess yourself about, what do I actually own? Because when you really sit down and think about it, if everyone dropped out of their 401ks, took that cash, then tried to go to the grocery store, buy a house, get some gold, I don't know, whatever else people want, but if they tried to though spend all, you'd realize we don't own what we think we own. It's time dependent. It's all at like a flow rate. We expect this many goods and services to be available at any given time, as long as we don't spend all our credit at once. And so people got to realize it's fragile. It requires this steady state flow rate of goods and services to keep coming in, and the price level not to change very much. And as long as all of that's the case, then we're fine. But there's a lot of assumptions baked into that cake that I think people need to be aware of.
So to your point, that money's not there, right?
Right.
Everybody goes to grab it. That number you're seeing on your 401k account, your Robinhood app, whatever it is, that's not cash.
No. Like if everyone tried to cash out of their 401k at the same time, I don't know. You might be able to get 10% of it. It's hard to guess. You wouldn't be able to get a lot of it.
Yeah. And we kind of mentioned this earlier in our chat, but similarly, now this is a little bit different, but if you have $100,000 in your bank account at TD Bank, you can't go to the bank and say, okay, give me my $100,000. Like,
right.
I worked really hard for that money. I want it. Give it to me.
Right.
They won't give it to you. That's your money. That is your money, but
because they don't have it.
It's not there. They don't have it. Yeah.
Right. So like
There's
people
a
got
good
to
chance
realize
if
that
you
multiplier.
were able to successfully get the money, you would get arrested, or actually there would be civil forfeiture if you walked out of the bank with $100,000, because just having that much amount of money in the U.S. is considered eligible for taking by the police.
Is it really?
Just by having money?
Yeah. If you have $100,000 of cash, the police can just take it.
I didn't even know that.
Because the likelihood of you being up to no good is so high that the police are able to take it. Yeah, it's called civil forfeiture. They can take it without any kind of warrant, without any kind of conviction, or even really without accusation.
Like
They
due
just have to
process.
say-
Like
they just have to say, with that much money, you're probably up to no good. So therefore, we're not going to let you.
Yeah, I didn't even.
What
know
if you
that.
say swipe or no swiping? That's
Well,
like
now that changes everything.
yeah. I mean, that's like getting no trial for wearing a black hoodie in the wrong places, right?
Yeah.
But
So I mean, yeah, like if people think about the multiplier, right? So like you put your money in a bank, then the bank lends out all of your money because they're insured by the government. So then all that money gets lent out. Then all that money gets put into like businesses or lent to like corporate bonds or whatever. And then those corporations issue stock, and then all those stocks, big banks borrow to buy those stocks. Like people got to realize the amount of credit in our system. Like it is staggering. It's hard to even quantify without making your head explode.
right.
So I don't know.
Hello.
I don't know what we were gonna go with solutions though.
Yeah, we're supposed to say something positive. Now, what should we do?
Yeah.
What should the common man do, right? Like, what should a listener do in this scenario?
I would say own. I think we lost John. Hopefully he'll come back.
John. Well, he'll have our audio if nothing else.
Yeah. So what I would say, what the common man should do, is reduce your credit levels, right? So if own what you think you own, right? If you're sitting and looking at your 401k and being like, man, I got, I don't know, 20 million in the bank, in my 401k, sell some of that. Take the cash and go buy a boat. I don't know. I don't know what it is you want, but like,
I wouldn't encourage boat buying, but a house. Maybe.
All right, fine. Not a boat, a house. I don't know. Whatever it is you need. My point is, buy something real. Buy gold. Buy, I don't know. Just if you reduce your, obviously the common man doesn't have 20 million. So let's say you don't even have a 401k, but let's just say you have money in the bank. I don't know. Hold a little bit of gold just as a hedge. I would say this is an investment advice, so don't listen to me. But I'm saying if you want something real, and know that like you're gonna have it, don't expect you to be able to just go to your bank account and just pull all your money out and be like, and even then, if you do, if it ever got that bad, I think prices would skyrocket. So even if you could get your money out, it wouldn't buy as much as you think it would buy. So I don't know, have some canned food or something that's real. But ultimately, how do we get out of this situation? I think we have to return to a hard money system, because otherwise the Federal Reserve can just keep printing more and more money and digging us deeper and deeper into this sort of credit bubble, which I believe has been going on for 40 years, ever since like the 1980s when we got off the gold standard. Because these things take time, and don't just take it from me. Ray Dalio actually has like a thesis he's put out on sort of money and credit, and he basically talks about long-term debt cycles which are created by central banks and how they take between 50 to 100 years to pop. And I think we're close to the end of a long-term debt cycle. I would take his advice because he's the most successful hedge fund manager in the world. So you don't even have to take my advice. You could just take his.
Or you could try to find out what he's shorting and then try to squeeze him out of his shorts.
Take him down.
Welcome
Jeff,
back,
I mean,
John.
it's a good point. That explanation of how money works is not a lot of people think about. We all learned that. It's like, why is that green piece of paper in your pocket worth something? It's like because someone's willing to accept it for their goods or services. It's like, and as long as that's true, it's worth something. It's like, okay, cool, but it's like, what happens when that's not the case? You just got to ask yourself that question. It's like, it makes you look at the dollar a lot different. It's like, what would happen if I couldn't use this anywhere? How would my life be different? What can I actually do? Okay, that's pretty scary. What would need to happen for this dollar to actually lose value? Well, maybe something like printing 20% of the existing dollars into existence out of thin air in 1 year could do something that would be a bad effect on the amount someone's willing to pay for this dollar. It's like, okay, well, that just happened. So it's like, just kind of run through that thought experiment in your head if you've never done it before, because like we're saying, it's not no investment advice, but if you're just following the
As
herd,
your lawyers told you to say.
Ted called us up. He
yeah,
said,
we don't want the SEC going after us.
Yeah.
But yeah, just to be a person that never has thought about that and to have their wealth denominated in dollars, you got to be able to be like, I have some assumptions that I must have made at some point, and just examine those.
Right. And to add on to that, right? So, like, we're playing this game right now with a very low probability of failure, but it's catastrophic failure, right? So, like, you can imagine like some sort of factory or refinery or something like that. And for 20, 30 years, it'll go humming along just fine. And it'll seem like nothing bad could ever happen. And then one day it'll just explode. This happens, okay? Because it's catastrophic failure. It's unlikely, but then as a result, the whole thing shuts down. And this happens in the real world. So you have to consider what are these catastrophic risks, and you have to be prepared for them. You have to take them seriously, because as improbable as they may, everyone likes to go, oh, you're just like, you're a doomsday, you're a conspiracy theorist, you're crazy. Like, look, it's been 50, 100 years, nothing bad has happened. So yeah, it does sound crazy. I don't blame you. There was a time when I thought it was crazy, but when you actually consider that there's these really rare events but have really catastrophic implications, you should prepare for those, right? You should have like a hedge against those. And to give you another example, let's say you had 100 or just a coin, right? And you just flip it. And every time it's heads, you get $1. And every time it's tails, you lose $1, right? You can figure out pretty quickly the expected value of this coin is 0. You can flip this coin like all day long, but probably you're not going to walk away with very much money by doing it, okay? And you probably lose interest in the coin, right? If you flip it and it's just like, okay, this is a waste of my time. All right, but now imagine you have a 100-sided die, and every time it lands on, 1 through 99, you get $1. And every time it lands on 100, you lose $100. It's the same as the coin, but you're going to have a lot longer runs of winning money, and you might feel like you're so smart because you're making money and you're never losing. But the reality is that's still just a zero-sum game that you're playing, and in a long enough time horizon, you're not going to walk away with very much money. But that's the casino Wall Street has built. And when this is the snake oil they sell. They say, oh, you're rolling that die. I see you're making a lot of money investing in this game. But that's a lot of hard work rolling that die. You're winning, you're doing you're making good returns, but we'll hold that for you and we'll do a good job and we'll just take, 2%, whatever. And we'll roll the die for you. You don't even worry about it. We'll handle everything for you. It may seem like, oh yeah, good deal. But the reality is you're still playing that zero-sum game, and each time you roll, they're walking away with 2% of your gains. So they're walking away with all your money, and you're never going to come out a winner in this game.
Yeah, I think one of the misconceptions you're alluding to that, I'll say really two things. Number one, I think it's well documented that it's in human psychology, people do a very poor job of taking into account really low probability, really high impact events. As you mentioned, like the volcano exploding. But additionally, I think in the investing scenario, there's some poor analogies and phrasings that are used, such as, you're making your 8% a year return because you're putting your money to work. Right? So it's like because you did something and you're working and you're investing in it, that's why you're making a little bit more money. But in reality, it's because you're putting your money at risk. And
Right.
that's much different than putting your money at work. I'm not, going and digging holes with a shovel and that's why I'm getting paid. I'm
Right.
actually like chancing losing all of it every time it's in an investable form. And so I think the phrasing of putting your money at work is poor phrasing. It's putting your money at risk is what it is.
Definitely. And I think people have not only tried to sell people on the idea that like all these new financialization tools like diversification and hedging and this and that, they all eliminate risk. They can't eliminate risk because if they eliminate risk, they eliminate return. So they're just squeezing the risk into a smaller, more catastrophic event, and they'll turn to the government with bailouts and then the Fed, and they keep squeezing this risk into a smaller, more unlikely event. And that event I'm talking about is a dollar failure. That's very unlikely. We never would have thought this would happen, like, I don't know, 20 years ago maybe. But they keep trying to eliminate risk from everywhere else, and the only where left for this risk to hide is in our currency. And that's the danger, I think.
Yeah, that's a lot to think about. Definitely a scary thought. Because that's hard to avoid, right? Like,
right.
You've, I guess, in a sense, successfully spread the risk around to everybody. I
Right.
think that's a good thing.
Right.
For those people taking the risk.
But
So let's end the episode with we can all say how many shares of GME we're gonna buy tomorrow.
GME. I can't. I am locked out of my ability to buy GME, unfortunately. Could sell it if I had it.
What's funny is I've been following Wall Street Bets for like years, and I never assumed they could pull anything like this off. I always thought they were just crazy. But like I knew they were doing this. I just didn't think anything of it.
Well, interestingly enough, I had seen in the news in the past, 6 months that actual Wall Street advisors had started including Wall Street Bets in their research.
Right.
So when you're saying like who's making these huge pushes on these like Wall Street Bets forums, like it could just be other firms on Wall Street.
That's true, because they're all looking. Right? It's all anonymous, right? Yeah, no one knows.
Yeah, and who in reality has the amount of capital to move markets?
Right.
It's people on Wall Street.
Oh, we totally missed this one major point I wanted to make, which was the biggest holders of GME are like Fidelity, BlackRock, Vanguard. I can't believe we didn't talk about this.
Well, it's okay. We can clip anything else out if we need to.
Yeah, but like the biggest holders are like all these money managers, these big money managers, and it's like they're gonna win the most. Like it's not really sticking it to the 1% as much people think it is.
Right.
Yeah.
Granted, it's not their money, but they do.
Yeah,
they
it's really
get
actually
fees
almost
based
making
on how much money they make.
One hedge fund is getting bigger. The other one, the smaller one, is just going away. So it's just like
right.
Right. Yeah. They're not even like the biggest hedge fund. Like if it was
I'm
like
sure they're a relatively small one, I think.
Yeah. 20 billion, that's not that much.
Yeah.
I mean, they're big for hedge funds, but even hedge funds aren't like the biggest players in town. Like these money managers like Fidelity and Vanguard and these asset managers, that's real Wall Street right there.
Yeah. All right, guys. Well, I'm kind of losing the connection, so we should probably wrap up.
All right.
Let's go. That we're over an hour here. That was awesome convo.
Yes. We should have someone on from Wall Street one of these days so they can defend themselves.
This is true. We know plenty of them. And in the meantime, we could post this recording on Wall Street Bets. See if we get any traction. You guys are idiots. Love the energy, though. Love the energy, guys.
All right.
All right. It's been fun.
Thanks for doing less.
Absolutely. Later, y'all.